Hey guys, it's Crossroads here. Today I wanted to talk about SoFi, specifically earnings, which are this next week, Tuesday morning. Now, by the way, if you're a PayPal shareholder, earnings are on the same day. I plan to get out of my earnings predictions hopefully by Sunday. It may be Monday if it gets delayed. And I won't be able to cover that one live this time. I'm going to be with the guys for the SoFi earnings next quarter. I'll switch back to PayPal as well as far as my focus to cover that live. But let's take a look at my earnings projections and predictions for what the stock I think will do, but even more importantly, the underlying company as well. Now, the too long, didn't read, didn't listen is these are almost as good as last quarter. The reason why it's not quite as good is simply just because it's against a little bit harder comps. You can see this pretty sizable dip in quarter two, which led to a tremendous beat last quarter. But this quarter is going to be really, really good too. And quarter four, man, I can't wait for those either. So let's take a look. First, members. Members, I have predicted, and let me throw this up too so you can take a look at this, 960,000 members. This would be their best quarter on record, a little bit short of 1 million. And so this is, by the way, gross, not net. So the net will be a little bit lower. There's always a little bit of churn, no matter what fintech that you're in. And but regardless, this might put them on track to possibly get the coveted 1 million members in quarter four when they have basketball starting up, when they have football, when they have TGA as well. And of course, football season in quarter three, it always tends to do good. We've seen a lot of data from sensor towers to website traffic. Tanner's covered both of those very well. There's been a lot of additional promos, even some matching that usually you don't see with the SoFi platform itself, and very aggressive marketing, as well as, of course, that partnership with Josh Allen too. There are some of their segments which are heating up as well, which does help. So I think that this is going to be a tremendous quarter as far as members growth of 960,000. Now, net revenue, I am looking at 967 million. That is actually just shy of 40% year over year. I was thinking when I was doing these, I'm like, I don't know if SoFi will get to 40%. Maybe it'll be 36, 37. And then I went and I did the math on everything else, the lending, the tech, the financial, corporate, and the adjusted margins that I thought they would have as well. So as far as this, are they going to be penalized for not growing 40% year over year? No. I mean, when you're 39.9%. And it's not like SoFi's stock price is ridiculous at this point. It's not super cheap like it was, even like 6 to 9 months ago. But it's a good value still. Frankly, if it wasn't my second largest position, I would be happy to add into earnings, actually before earnings as well. So I think we might actually get a little bit of a pop. We are seeing some pre-earnings rise as well. So the individual segments that contribute to this net revenue being up almost 40% year over year are, of course, corporate, which is the least important. It's there. It's a little bit less than last quarter, which is negative 60 million. This segment's almost always negative as well. I just put an average of there of $50 million. It may actually be a little bit more on the negative side. If so, just take a little bit off the top. Either way, they're close to 40% year over year growth. Biggest fuel, of course, is the lending segment, and the fastest growing is financial services. Lending, I project 479 million. Now, a couple of things go into that. One is on the student loan side. There are very expensive rates and more limitations as far as the amount that you can actually receive as a grad and post-grad student for student loans. And so you always see a seasonal uptick anyway in quarter three. You're going to see even more on the student loan side as well. Now, that's still a very small part of their business, just because that's a segment that has been under a lot of pressure. Those things have changed as far as tailwinds, and I think it'll continue to accelerate for SoFi, although with seasonality in mind. At home lending as well, I think sees an acceleration here. Again, this is a very small segment for SoFi. Tremendous tailwinds against that business right now, but I think that will continue to accelerate. The big one, though, is the personal loans and that lending space. Now, the nice thing is we've seen a lot of other banks go first, and banks are doing really well. They're talking about demand out there being outrageous for lending at this point. The only loans that people have concerns about are, of course, the subprime auto loans that they were loaning, $800 loans that would be 7 or 8 years, $800 a month to people that didn't make that much. And I couldn't see any way that would not end in disaster. It has. but that does not impact SoFi at all. So the other factor that's really helping them is the rate cuts. Now, we know that they cut rates this last quarter. There are 2 more meetings, and we see the expectations here that only 3.3% of people think that they will not cut rates. 96.7% expect 1 rate cut. And if we look at December at the end of the year for that next meeting, we can see here that there again, the consensus overwhelmingly is for an additional rate cut. So we're looking at 2 more rate cuts as well. Now, what can happen if there are expected rate cuts like there are at the very end of the year? And then there's going to possibly be a pause, and that's actually what the data is looking like, that they may pause for a little too early to be soon, but maybe at least a quarter, and just kind of assess, which may be prudent and wise. Usually you'll see some front running of demand and a lot of lenders trying to really ramp up that lending into that last quarter. And this is, of course, a seasonal time that would be an advantageous time in Q4. Now, even though there's been a rate cut, I think that doesn't mean that that demand level was drawn forward. Instead, with these 2 other rate cuts almost certainly coming as well, lenders are wanting to ramp up all the lending they can do. I've seen it. I'm a SoFi customer as well as a shareholder. And so I'm, as a person that's turning off a lot of notifications, still getting slammed by SoFi talking about all kinds of different loans and lending products and credit cards, but it's mostly around the loan side, some student lending, some house stuff too, and even some car insurance referral things. So SoFi is doing everything they can do, like Lending Club, which also presented earnings this week, did very, very well. And usually when Lending Club does well, SoFi does well. As a result, again, going back to those numbers on the lending platform, 479 million, a very nice increase. Tech platform, I am expecting it to be flat quarter over quarter. The main reason, there's a couple of reasons. One is there are some accounts that are in the process of rolling off. For the biggest one that we know about for SoFi is specifically the Chime account. They've already moved over all their credit card products. They're in the middle of moving over their debit card accounts. And what they've done is in August is all new accounts were not going to be put on Galileo, but on Chime Core. And they look to continue that transition of all the existing debit card members through the end of the year. It doesn't look like that they're doing all those at once, but segment by segment. And so I think that we might see a little bit of a slowdown there until the end of the year. Now, we're going to also see the 2 big travel rewards companies, which, of course, we found out their information as well through SoFi, but it's a little bit too early for revenue from that. Expect that next quarter, most likely, if not Q1, where they also receive a big one-time payout from Chime migrating into their contract early with Galileo as well. So flat doesn't mean terrible. It doesn't mean the tech platform's dead. I'm not the most bullish on it, but you'll have quarters like this as well. And hey, maybe they'll surprise me. Now, the last segment of this is the financial services, 428 million. It is their fastest growing segment. As a reminder, most, although not all, most of the loan platform business goes in here. And the same as what I said as far as lending goes for the financial services. There are a lot of loans that SoFi doesn't want to underwrite, and instead they kicked those over to the loan platform business, which accelerated rapidly. I believe it was 55% year-over-year growth. No, it's sequential growth last quarter. Of course, this is a relatively newer product, and it's accelerating rapidly. Tremendous tailwinds in that area. So if you look at that in aggregate, again, 967 million gets us just under 40% year-over-year growth. Again, if they surprise us with corporate, and it's less than that, we might see 40% year-over-year growth. It wouldn't shock me if they try to do everything they can, of course, legally, to have hit the 40% if they were going to be that close. Adjusted EBITDA margin, I have at 29%. That is an increase. 280.4 million is the computation that comes out the other side, with net income of 121 million. That's good for 47% year-over-year growth. And EPS was a small figure, so I don't use it as like a year-over-year comp, at least not yet. But it is 11 cents. I believe 11.2 cents was my actual calculation. You can do the math, though. So overall, this is going to... Analysts, of course, are bullish on SoFi, more so than they've been. We've even seen bears raise their projections and their price targets just because SoFi is executing at a high level. And their bearishness already looks silly. They don't want it to look ridiculous. It already is. It's too late, bear. Sorry. But they're projecting only $887 million. So this is actually a tremendous beat over what the expectations are, as well as they are expecting 8 cents of EPS versus I have 11, even if they do 10. It's a very nice beat no matter how you slice it. I should note on the EPS side, if you're doing calculations on your own, note that there was some dilution right after the earnings last quarter. As a result, it's actually a considerable amount. That's why we have 11, not 12 cents EPS. That's not a bad thing. I'm not going to rehash that argument, but just something to be aware of as well. So the last thing is as well that made it interesting to do these projections has been the tone of Anthony Noto. We've seen a lot more swagger out of him. He's been a lot more active on X. He's been reposting and retweeting a lot of things. SoFi's investor side tends to be a little bit more active right now. They're releasing products at a greater cadence. He's talked about how tremendous it is to actually have tailwinds, the strongest tailwinds he's had in 7 years since he's been at SoFi. And there's some competitive aspect between, of course, SoFi and Robinhood that is not just imagined. You can see the way Anthony Noto regards the competition, and they don't compete in every area. But regardless, it's definitely there. Glad to be a shareholder, of course, of Robinhood and also SoFi. But yeah, these earnings are going to be amazing no matter how you slice it. Even if I'm a little bit high on these numbers, they're going to surprise yet again. Now, as a result, what do I think that's going to happen with the stock price? Because that may be something you're wondering. Now, we are seeing a little bit of a run. Let me make this 1 month here. A little bit less here. We're seeing the beginnings of a run. Let me change this to hours. It's a little bit more apparent. There we go. Over the last month, you can see at least since really Monday, we've seen a nice run or just after Monday into earnings. That's not atypical for SoFi. We've not gotten that every earnings so far this year. But that's a normal thing. It wouldn't surprise me if they post numbers this good that essentially round up to 40% year-over-year revenue, or they get very close to it, that we see them break and hold above $30. Now, that could happen, of course, before earnings. We have Monday as well as, anything can happen. That's the most volatile day right there in front of earnings. And so, yeah, I think that we'll see SoFi break and hold above $30. Doesn't mean it will never come down or it can't come down, but I think that that'll become the norm actually fairly quickly. Exciting times to be a SoFi investor. Anyway, let me know what you guys think in the comments. Am I too high? Am I too low in any other area? What are you hoping to see as far as a mention in the earnings as well? And as always, thank you guys for watching, commenting, and subscribing. Till next time, happy investing.